Ladies and gentlemen, good day and welcome to the 1Q FY22 earnings conference call of BCL Industries Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Suryavanshi from PhillipCapital India Private Limited. Thank you and over to you, sir.
Thank you, Rutuja. Good afternoon and very warm welcome to everyone. Thank you for being on the call of BCL Industries Limited. We are happy to have the management of BCL with us here today for question and answer session with the investment community. The management is represented by Mr. Kushal Mittal, Joint Managing Director, and Mr. Pankaj Jhunjhunwala, a Director, Suksha Distillery. Before we start with question and answer session, we will have some opening comments from the management. Over to you, sir.
Good afternoon, everyone, and thank you for the introduction, Mr. Suryavanshi. We would like to welcome everyone to the earnings call for the first quarter of the financial year 2021-22. For the ones who are participating for the first time, let me give you a brief background about the company. BCL Industries Limited is a diversified business house in manufacturing and development, with business interests spread across a variety of industry verticals, namely edible oil and vanaspati, distillery, and real estate. The company started off in 1976 with a solvent extraction plant of 40 tons per day, extracting oil from rice bran. Over the years, the company has grown to become one of the largest edible oil manufacturers in North India, having a capacity of 1,020 tons per day. Furthermore, we forayed into the business of distillation by setting up our own grain-based distillery of extra neutral alcohol of 100 KLPD in the year 2011, along with a bottling plant in Bathinda, Punjab, and later doubled the capacity to 200 KLPD as the business grew. In order to grow in the distillation business, the company is now installing a new state-of-the-art distillery of 200 KLPD with 10 megawatt cogeneration power plant in Kharagpur, West Bengal, which is expected to commission in December 2021. Now talking about the key financial highlights for the first quarter. The total income for the quarter was at 452 crores, which is an increase of around 63% year-on-year and 4.8% quarter-on-quarter. EBITDA for the quarter was at 28 crores, which is an increase by around 63% year-on-year and 2.2% quarter-on-quarter. EBITDA margins were at 6.15%. Net profit was at 17 crores, which is an increase of 141% year-on-year and 27% quarter-on-quarter. And PAT margins for the company were reported at 3.74%. The improvement in profitability was part on account of significant reduction in finance cost on a quarter-on-quarter and year-on-year basis. This was due to the higher cash flow generation from the company and better utilization of inventory from operations, resulting in lower working capital requirements. Coming on the operational highlights for the first quarter of financial year 2021-22, I would like to start with the distillery segment. The revenues from the distillery segment for quarter one stood at 136.5 crores. BCL Industries continues to be one of the largest suppliers of grain-based ethanol in the nation, with a tender to supply 4.5 crore liters of ethanol in the sugar year 2020-21. The company is experiencing great demand for both ENA and ethanol for both industrial and portable purposes. With the advancement in the target date of 20% blending in petrol, the company is working towards expanding its ethanol capacity in both West Bengal and Punjab. The company is also experiencing high realizations from its balance capacity of ENA and from its ethanol supply, which are visible in the quarterly results. In terms of sales revenue, we registered a hike of about 29% in sales compared to the previous quarter. The work for Suksha Distillery is in full swing, and all machinery suppliers along with BCL team are working tirelessly to ensure that commissioning of the unit can be achieved by December 2021. The company has also gotten approval of to add another additional 100 KLPD of ethanol plant in Kharagpur, West Bengal, by the DFPD, and which will make the work to add another 100 KLPD will begin soon after the first 200 KLPD of the Kharagpur plant is commissioned. With regards to the edible oil segment, the revenue of the edible oil segment for Q1 financial year 22 were at 312 crores. Due to an increase in the edible oil prices globally, farmers in India were able to get a remunerative price for their oilseed cultivation, which has led to an increase in availability of oilseeds for processing, which is the company's expertise, leading to an increase in revenues and profitability. And with the government's focus to make in India for the edible oil sector, the company expects to increase its revenue and capacity utilization from the edible oil unit in the coming quarters and years. Lastly, in the real estate segment, the company recorded a revenue of 4 crores for the quarter. The company went through a temporary slowdown for the period of lockdown in terms of real estate, but the company expects the sales to pick up in the coming quarters. Thank you. I would now like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anshul Vaidya from Edelweiss Wealth Research. Please go ahead.
Thank you. Hello, sir. Congratulations on the good set of numbers. I have a couple of queries on the distillery segment. So first one is the distillery segment reported a flat sales and the volumes, but the margin has expanded by 450 bps. So could you just elaborate what were the drivers of the margin expansion? Was it the raw material or some cost benefit which will sustain for the upcoming quarters?
Thank you, first of all, for the question. I think the margins, when we look at quarter and quarter when compared to the last year, they're about the same with a slight increase, which I think this time the prices of soya DOC worldwide are quite high, as I'm sure many of you are aware who are tracking the commodity industry, which has led to an increase in the prices for DDGS as well, since they're both used as protein in animal feed. And we're seeing the prices at an all-time high, which has contributed to the margins.
Okay, thank you. Just one follow-up, like we have been hearing from your other competitors that ENA prices are increasing because there has been a diversion of capacity from ENA to ethanol. So I see your numbers this quarter, the ENA realization has been down 8% year on year. So is there any specific reason? Is it the fixed price contract you guys have, or there is a lag in the pricing? Could you please help me with this? Thank you.
No, I think the ENA prices have stabilized for the past year and they haven't been increasing a lot. So I don't know where you got that data from, but for us, the ENA prices have been quite stable for the past year.
Okay, thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. Participants, you may press star and 1 to ask a question now. The next question is from the line of Swanil Ketan Shah from iWealth Management. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. Hello, am I audible?
Good afternoon. Good afternoon.
Yeah, sir, a couple of questions. First was on our distillery. So next 2-3 years down the line, just wanted to understand what are our plans here, And in our presentation, you had written that the new capacity should be commissioned by December of this year. So, sir, just wanted to understand next 2-3 years, what is the game plan?
Yes. So for now, by December 2021, it is our target to commission the 200 KLPD ENA and ethanol plant in Kharagpur, West Bengal. The plant is designed to produce either full ENA or go up to 60% in terms of manufacturing ethanol. The more than around 80% of the machinery has already reached on site, and all our vendors are currently placed on site and are working to ensure that the timeline is met. As we all know, the monsoons in Bengal are quite difficult to work in. So we're working day and night to ensure that the plant is commissioned in December 2021, but could be 1 or 2 weeks before or after, depending on how kind the weather is towards us. So that is a 200 KLPD of additional capacity coming within this calendar year. And also at the same time, we're working towards adding another 200 KLPD of ethanol only capacity in our Bathinda unit. So our current capacity in the Bathinda unit is 200 KLPD of ENA and ethanol, and we wish to add another 200 KL. The inter-subvention file for the same has been approved. The file is moving very well in terms of the environmental clearance, and we expect that to come in hand very soon. And most of the machinery orders we're currently in the talks with the machinery suppliers, and a lot of the orders are being finalized within this month's time. And we expect that plant to commission before the end of next calendar year. Our targets for now are next October or November, and we can think with the speed that it's moving, we aim to it before that. And also, as I mentioned in my speech, we were able to get our file approved to add another 100 KL of just ethanol plant in the Swaksha distillery. So our inter-subvention file has now been approved for 300 KL. And once the 200 KL of ethanol, ENA and ethanol is commissioned in Swaksha, we will start work to add another 100 KL. We've already started working towards our file in the MOEF for the EC for another 100 KL, and are in talks with the machinery suppliers to start work there. So before the end of next year also, it is our target to bring that plant to 300 KL. So in the next 2 to 3 years, we expect that our total capacity would be around 700 KL when it comes to distillation.
Okay, so from 200 KLPD, our plan is to reach to 700 KLPD.
Yes.
Yes, and sir, incrementally, how much capex will be incurring for it?
See, around 140 is being done for the 200 KL, and additional 70 to 80 crores would be done to add another 100 KL at Kharagpur, and about 180 crores would be done at the Bathinda plant.
Got it. 180 for that, so 300, 400, around 480, 500 crores of total capex.
Yeah.
Got it. Okay. And sir, just to understand in terms of margins in our distillery segment, so we are giving breakup of 3 segments: ethanol, ENA, and the last one is the DDGS, which you were saying about it. So sir, just wanted to understand on this, what would be our rough EBITDA margins here as of now, and how are you seeing those panning out going ahead?
Our EBITDA margins are currently around, I think, around 12 to 13% in the distillery segment.
Yes.
And this can fluctuate a little, but we're very confident that they will stay around the same level for the next foreseeable future. We don't expect a significant increase or decrease in the margins in this segment.
But sir, we have 3 segments, so ENA would also be having similar margins, or that would be having higher margins than ENA, ethanol, and DTGS? What would be a rough estimate on? Yeah.
ENA and ethanol are now usually similarly priced in the market, so the margins are about the same. There's a higher production cost in terms of manufacturing ethanol, and the price for the ethanol in the market compensates us for the hike. For Punjab, ENA prices are around the same price. But for Bengal, we expect ENA to give us slightly better margins, as Bengal is a deficit state when it comes to ENA. And over there, we might see a higher margin from ENA when compared to ethanol.
Okay. Because, sir, when I see a few of our competitors who are in similar space, their margins are inching upwards from 18 odd to 23, 24 odd %. And we are also in the similar space, we are doing 13.5, 14%. So why this difference is there?
I think it might account for bottling, as we are not much into bottling.
Okay. So bottling means our own brands, you are saying?
Yes.
In IMIL?
In both, in Indian-made foreign liquor and Indian-made Indian liquor.
Okay. So there the margins will be much higher.
Yes.
Got it. And sir, last, in terms of raw materials, sir, what is the current prices, and how do you think that will pan out in next year or the next 6-8 months?
See, the prices for raw material fluctuate depending on the raw material itself. But for broken rice, currently the raw material price is around 17 to 18 rupees a kg. And we expect this to continue with not much increase for the coming quarters.
Okay. And what was this price, sir, 3-4 months before?
I'm sorry?
What was the broken rice price 3-4 months before?
It was similar.
Similar only, so it is not increased as such.
Yeah.
Okay. Great, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Mehul from Quant Mutual Fund. Please go ahead.
Hi, am I audible?
Yes.
Yeah. Hi, sir. So my first question is regarding the capacity utilization that you have right now in terms of ethanol, and what is the kind of capacity utilization you are looking from the Kolkata plant or the West Bengal plant going forward in the first year, sir?
Yes. So our distillery sector is currently working at 100% capacity utilization, and we expect the same from our Kolkata plant once it comes to full operation.
Okay.
I'm sorry?
What kind of payback period are you expecting from the West Bengal plant?
I think Pankaj can better answer this. Hello, are you on
the line of Mr. Pankaj got disconnected. Please stay connected while I reconnect him.
Okay, so I can answer this. A payback period we expect around 4 to 5 years.
And going forward, like the share of distillery business as compared to your edible oil business, like what's the split of revenue that you're looking for going ahead?
Your voice is cutting a little. Can you please repeat?
Am I audible now?
Yes, better.
Yeah. So I was asking that what kind of share of revenue are you expecting from the distillery business maybe in say next 2 to 4 years as compared to your edible oil business? What kind of revenue pie are you looking at?
Your voice is a little troublesome. Are you asking my share, what share I expect from distillery?
Yes, share of revenue that you are expecting business going ahead.
In terms of revenue?
Oh, yes.
So in terms of revenue, I expect my my distillery segment to give me around 1,700 crores in terms of revenue in the next 2 to 3 years, and around 1,500 we are aiming from our edible oil segment. So about same, but with the distillery segment taking over a little more.
Okay. And what kind of margins do you expect in blended margin going forward?
In margins in which sector?
Blended overall for the
Sorry
company.
to interrupt you, Mr. Mehul, but we cannot hear you. Your voice is breaking, sir. Can you please check?
Is it all right now?
No, sir. It is breaking in between.
Just 1 minute. Hello? Is it okay now?
Yes. Yes, better.
Yeah. Yes, sir. So I was asking, what kind of margins are you seeing for the company going ahead? The EBITDA margin.
So the margins, as I already mentioned, in the margins won't increase significantly. We're expecting margins to improve overall as our distillery segment takes more of our revenue share, as it is a higher margin business when compared to edible oils. And also we expect slightly higher margins from our Kolkata unit, as the state is deficit in terms of ENA, and we expect ENA to sell at a higher value. So we expect the consolidated margins to improve, with the distillery segment giving us more in terms of revenue. And we expect the distillery margins to also improve slightly with the Bengal unit coming into commissioning. And edible oil margins we expect to stay around the same or improve slightly, but it won't improve significantly.
Okay. So, and what about your borrowings plans? Do you expect to borrow in future for any kind of capex, or would it be completely from the internal accrual?
No, such expansion, of course, we will need to borrow. So for our Kharagpur plant, we're borrowing around 45 crores for an entire investment of close to 150 crores. For our Bhindai expansion, we're looking to borrow 120 crores. So around that.
All right. Okay, that's it from me. Thank you. Thank you, sir. Thank you.
Thank you. Participants are requested to press star and 1 to ask a question. The next question is from the line of Karan Agarwal from Trust Investment. Please go ahead.
Hello, hi. Thank you for taking my question. So my question is around your sourcing of raw materials. So where are you currently sourcing your broken rice from? Is it through FCI or through mandis?
No, so FCI does not sell neither actually. Neither does do we get any broken rice from the mandis or FCI. FCI does not have any broken rice. We get surplus rice, which is under a different policy from FCI. And so broken rice is a byproduct from the rice mills. So either we get our broken rice from various rice mills that are close to us, or we have a trading network throughout the nation that collects broken rice from various rice mills and consolidate it and sell it to us.
Okay, thank you. Considering that we are taking a capacity from 200 KLP to 700 KLPD in the next 2 to 3 years, so will there be any issues with regard to the availability of broken rice near our distillery?
No, we don't expect there to be any shortage, as you know, the land under cultivation when it comes to food grains is increasing every year in India, and already we're sitting on a food grain glut that is quite high. I mean, FCI has come up with a good policy in terms of surplus rice conversion to ethanol, and FCI itself procures close to 2 lakh metric tons of grains a day, which is a very high amount. And also we've noticed that the broken rice or the shorter rices that were available for the labor to eat before and for the poorer population, now even they've moved on to a better quality of rice because of the grain glut in the country, and the prices of rice and other grains are decreasing, and that has resulted in a higher availability of raw materials for distilleries like us. So we don't expect any shortage of raw material with the capacity expansion. And also in the roadmap for the ethanol industry that was created by NITI Aayog, they have forecasted, they've actually forecasted a requirement of close to 466 crore liters of ethanol from food grains compared to close to 40 crore liters right now. So that is a tenfold increase. And they have looked at the raw material availability as well. And with the increase and with the current stock, there is no issues in terms of food grain availability for distilleries.
And so going forward, we can expect the prices to be around 17-18 per kg
See, that is very hard to predict a long-term.
Got it. Sir. So another question, since you earlier mentioned that the price at which you're selling ethanol and ENA per liter is similar, right?
Yeah.
And what is your, how should I put it? So since you are selling ENA and ethanol at the same price, how are we seeing this? As in, who is purchasing ENA from us?
See, ENA is being purchased by the portable industries, which were the original buyers, and now we've also seen an increase, a very high increase in the demand coming from the pharmaceutical and the industrial companies. So, for example, a lot of the pharmaceutical companies and the perfumery companies have started buying ENA from us. And there have also been other industrial, like Indian Glycol has become a big buyer in the recent times. So the ENA is, the demand from ENA is coming from both the portable alcohol industry and for various industrial users as well.
And for ethanol, we've already tied up with the government, right? We've applied for tenders. So from that segment, we are covered, right?
Yes.
So we have a guaranteed offtake. So thank you, sir. That was all from my side.
Thank you.
Thank you. The next question is from the line of Rashmi Ojha from Kotak Securities. Please go ahead. Mr. Ojha, please go ahead with the question. Your line is unmuted. Can you request you to unmute yourself if muted from your handset, Mr. Ojha?
Yeah, sorry. Good afternoon, sir. Thanks for the opportunity. My question was, what are the current realizations of ethanol and ENA as of now?
So ethanol is at 51 rupees 55 paisa, and ENA is hovering around 48 rupees.
Okay. And so second question is, since your cost of broken rice is less at 17-18, and if you are getting realizations of between 48 and 51, then why are we portraying margins to be at 12-13% for the distillery segment? Shouldn't it be higher actually?
No, the margins are where they are, and they're not higher. There are other costs involved in the industry. There's a significant fuel cost which is there, which has increased. So I mean, it's not that easy to calculate the margins, and they are what they are.
Okay. So you're saying whatever 200 to 700 KLPD ethanol and ENA capacity will go up, we'll have the same 12-13% EBITDA margins on the expanded capacity also, right?
Yeah, I mean, for the Bengal, we expect higher margins. And with the current industry scenario, we don't expect a significant increase in the margin. But in the next 1 or 2 years, it should stay around 13-14%. Might increase a little, but it's hard to comment on it now.
Okay. And last question, sir, what will be the cost of interest for this borrowings we'll be doing, like 150 crores for West Bengal we're doing, 45 crores for West Bengal and almost 120 crores for Bathinda. What will be the average cost of borrowings for us?
See, for the Kharagpur unit, the project currently does not qualify for interest subvention because we don't want to make 75% of our capacity for ethanol. So currently the cost of borrowing would be around 9 to 10%. But once the 100 KLPD is added, we'll qualify for the 100 interest subvention, and the cost of borrowing will decrease significantly by half, to be precise. And our Bathinda unit, we expect the cost of borrowing after interest subvention to be around 4.5%.
Okay. Thanks, sir. I'll come back in the queue. Thank you.
Thank you. Participants, you may press star and 1 to ask a question now. The next question is from the line of Levin Shah from ValueQuest Investment. Please go ahead.
Thanks for the opportunity. Sir, my question again is on the margin. So if we see the realizations at around 50 rupees and the broken rice cost at 17-18 rupees. So for our competitors as well, this is like the similar kind of realization as well as costing. but their margins are quite healthy as compared to what we do. So if you can help us break down this margins, like on the EBIT level, we are doing only 5 rupees per liter. So what kind of costs are involved over here?
See, I said maybe I cannot comment on my competitors as they might be doing more bottling than me, in terms of they might have their own brands and where margins will differ. But there are other factors that contribute as well. One I said is fuel cost, and that depends on where you're sitting. Currently, fuel costs where we are quite high because all the industries have now started operating, and that has led to a higher and imported coal also has become quite expensive. And then there are other various chemicals that are used in water treatment or in fermentation or other processes in the industry. So that also we've seen an increase in the price from our suppliers, which also affect the margins.
Okay. Sir, but if we were to, what is the kind of broken rice required for 1 liter of ENA or ethanol?
What is the broken rice required?
Volume, quantity. Yeah.
Yeah. So 1 ton of rice can give us close to 400 liters of spirit.
Okay. So broadly around 2.5 kg per liter is what the conversion comes to.
Yeah.
And okay. And then there would be some conversion cost.
Yes. And then there's a power and steam cost, which is quite significant.
Okay. Okay. Got it. Sir, and my second question is on this capex front. So overall, we are doing a 500 crore kind of capex ballpark number, and with the current increase in the metal prices, especially the steel and other metals as well, what kind of impact this will have on our capex and in our negotiations with the suppliers? What kind of price increase have they taken, and what impact it will have on overall capex spend?
Yes, so the capex that I'm currently dictating is keeping in mind the current steel prices and the escalation that we've seen in the past year. Once negotiating with all the vendors, there is a flexible policy in terms of the steel prices that we're putting into account. So up to a certain amount, both us or the supplier were willing to take the hit in the fluctuation of steel prices. But beyond the point, after in the initial stages of the project, if we see a very significant increase or decrease, either us or the supplier will take a hit, and that's how we're signing most of our contracts. But the current steel prices have been looked into and kept into account when I give you the capex plan. So that has been taken care of.
Okay. So, sir, if you can just give a sense about what is the kind of increase that has happened, let's say a year and a half, maybe if we were putting up the same capacity, what kind of capex would we have incurred, and now what is the number?
See, in the past, we're not buying exactly the same plant. There are always changes in the plant. So, for example, at our Bathinda capacity, the expansion, if we were going with a standard fluidized bed boiler, which uses rice husk and coal as a fuel, the capex involved would be significantly lower. But now this time we're going for a paddy straw boiler. As I mentioned, fuel costs have increased significantly, and we wish to use alternate fuels. And also with the straw burning being a big problem in the state of Punjab, we wish to utilize the straw for our own industrial purpose. Then we noticed that there's a 2.5 times increase in when you're buying a rice straw boiler, it's a newer technology. The boiler size is a lot bigger, so a lot more steel is required. But the current the Bathinda capacity expansion, that is currently we're looking at a project cost of 180 crores. I think with a regular fluidized bed boiler and with the old prices, I think the same could have been done for 120 to 130 crores.
Okay. Got it. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Karan Agarwal from Tusk Investment. Please go ahead.
Hello, yeah, thank you for taking my question. So could you please tell us from whom we are ordering the distillery, our vendor?
Yeah, that is yet to be finalized. The negotiations are still going on, but we're looking at a couple of vendors. Some we have worked with before, and it will be finalized within this month.
So whom did we order? Whom we have given orders earlier?
See, we worked with various vendors in Barinda. We worked with a vendor called Rudra. We worked with a vendor called Brapco, both based out of Maharashtra, and the Kharagpur plant is being worked on by Praj.
Thank you, sir. That answers my question.
Thank you. The next question is from the line of Rasmay Khodja from Kotak Securities. Please go ahead.
My question was related to the real estate, So I just want to understand till what time, you want to keep this real estate as part of the company, and at what point will there be any consideration for any demerger of this business going forward?
No, there's no consideration for any demerger because both of our real estate projects are in ready to move in condition, and the inventory is selling at its own pace. So once we're done with selling the inventory, the real estate will no longer be a part of BCL business, as we have no plans to expand further in the segment. But there are no plans for demerger as of now, and we're hoping to sell the entire inventory in the next year or two. It's a slow. It's in a ready to move in condition, so there's no capex involved in the sector.
And if you can just help us understand what could be the inventory as of now, and maybe as on today's price, if you have to liquidate these inventories over the next 1 to 2 years, what could be the realization or the revenue that you can book in this business?
Yeah, so I think with the current market price, we expect around 30 crores of revenue from this segment.
Okay.
30 to 40. The residential market is doing quite well, so we expect further appreciation, but it's hard to comment.
Okay. And since this is inventory, I presume there will be no expenses on this, and most of this 30 crores could flow into the EBIT or the PBT level, right?
Yes.
Okay. And this 30 crores will be spread across FY22 and 23, you're saying?
22 and 23, correct.
Okay. Thank you, sir. That was helpful.
Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Meera Naik, an individual investor. Please go ahead.
Good afternoon, sir. So my first question is, why did the finance cost come down significantly in Q1? And is this trend expected to continue with lower finance cost for the rest of FY22?
Yes. So as I mentioned, the finance cost has come down because in the past year, the companies had a higher cash flow generation, which is being utilized in the business. And also, the inventory levels were quite low because we were utilizing our inventory very well. So that led to us not using our working capital as much. We expect this momentum to continue. It could increase a little depending on the season. If it's mustard season or paddy season where we have to stock up on the raw material, it could go up slightly, but we expect the finance cost. We're trying our best to keep it as low as possible.
Oh, okay. All right. And so you mentioned about the capex for Bathinda. So could you just tell us something about the date portion of the capex towards there?
Yes. So we're targeting a commissioning date of November 2022 for that unit.
Okay. And so how will the reduced duty structures in edible oil impact the industry and also revenue margins for this segment?
Yes. So So the duties have been revised little, but what we've noticed is every time the government brings down the duty, the global market prices increase and they compensate for the decrease in the duty. This has been a trend for the past 6 to 8 months, and the same has happened now. So we noticed that soon after the government revised its duty structure, the global prices increased to make up for it. With the prices now still being very high, and just today there was a report that globally we're sitting on a low edible oil stock, which has led to a very bullish run in the past day or two. So we expect the prices to remain strong in the edible oil sector and the demand to remain strong with the festival season coming up. So we expect this sector to do well in the future as well.
Okay, very well, sir. Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star and 1. Next question is from the line of Rusmik Oza from Kotak Securities. Please go ahead.
Thanks for the opportunity once again. So I wanted to understand what kind of growth are you looking at in the edible oil business going forward for the next 2 to 3 years? And what are the realistic or existing margins, EBITDA margins in edible oil business, and what could be the path going forward? What kind of margins you're foreseeing in the future?
See, we're hoping in the next 2 years to bring our revenue from the edible oil segment to close to 1,500 crores at least. With our capacity utilization of our current unit increasing, that our current unit can easily give us revenues of 1,500 crores or slightly higher also. And we're targeting for the same. We're targeting to come up to 100% capacity utilization at our current unit. And as of the EBITDA margin for our oil unit, I believe they're close to 3.5%. With an increase in the cultivation of edible oil seeds and the availability of edible oil seeds, we expect this to improve in the future as well.
Okay. Thank you, sir.
Thank you. The next question is from the line of Anshul Vardia from Edelweiss Wealth Research. Please go ahead.
Thanks again for the opportunity. Sir, one question on the pricing of the ethanol. So I know that it has been decided by government each year. So can you share what is your outlook for the prices? Is there any risk of downside from the current level, or what is your expectation?
It's very hard to comment on that. I think it's a little soon to comment on that.
Okay. And can you just throw some light on the contracted supply of ethanol? Like, is it for the next long term, 5 years, or you have been contracted till this ethanol year 21?
No, it's just been for this year. The quantity has just been for this year, but we've participated. I mean, we won't have to get an approval to participate in a tender every year, as we've been approved for the next 5 years. But the contracted amount of quantity has only been decided for 1 year.
Got it. That helps. Thank you. Thank you for answering. Thank you.
Thank you. The next question is from the line of Levin Chuck from ValueQuest Investment Advisors. Please go ahead.
Yeah, thanks for the opportunity again. Sir, just correct me if my understanding, what you said earlier is that on the distillery segment, you are looking at a 1,700 crore turnover over the next 2 to 3 years. Is the number right?
Yes.
So, sir, we will have around 700 KLPD capacity. And if I do the math, then our capacity in terms of liters should be around 23-24 crore liters, right?
Mm-hmm.
So then at the realization of close to 52 rupees, our overall revenue from this should be close to like 1,200 crores. So
yes, but then there's also DDGS, which contributes to the revenue. So my 200 KLPD plant currently gives me a revenue of close to 460 to 470 crores a year. And if you do the calculation like that, I think you'll come to 1,700. Because you've only taken the spirit, but the byproducts are CO2 is also a byproduct, and DDGS is also a byproduct in this industry.
Okay. So that contributes to like around 30% of the ethanol realization, ethanol ENA realization.
30%, I guess.
Because if you do the 1200 crores comes from the ethanol ENA, and then there is balance 500 crores.
Yeah.
So in fact, more than 30%, 35-40% of total realization.
Let's see. No, around 30% from my calculation.
Okay. Okay. Sir, and after adding DDGS and the other byproducts, our margins would still continue to be at the current range is what we are guiding.
Yes, around that.
Sure. Okay. Thank you. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 now. The next question is from the line of Vikram Suryavanshi from Philips Capital. Please go ahead.
Yeah, good afternoon, sir. So basically, if you can highlight this availability of maize as an alternative raw material compared to broken rice, and how is that working for us, or will not that will not be much profitable?
See, maize is a crop that has been increasing in cultivation in our country, and we expect this increasing trend to continue as groundwater level in states like Punjab and Haryana are at a severe level, in our opinion, and maize is a very good alternate crop. So we expect this to continue, but in this year we've seen the very high increase in the poultry feed prices throughout the nation. That has led to the price of maize increasing in the market for the past 10 months, which has made it unviable for us to utilize maize in our process currently. But with the increase in the cultivation continuing and the prices and the farmers getting a good price for the maize cultivation in the country, we expect it to actually increase and become a very good alternate to broken rice for us.
Okay, and what would be current prices for maize per kg basis broadly, if you can?
See, I think maize landed in our unit currently would also be around I think 17 to 18 rupees, if I'm correct, and which is the same price as broken rice, but it gives us less in terms of alcohol when compared to broken rice.
Understood. That was from my side. Thank you.
Thank you. Participants, to ask a question may press star and 1. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Vikram Suryavanshi for closing comments.
Thank you, Rutuja. We thank the management of BCL Industries for giving us an opportunity to host the call and taking time out for interacting with the stakeholders. Thank you all for being on the call.
Thank you.
Thank you, Kushal, and thank you. Yeah.
On behalf of Philips Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.